So the number one question that I get from prospective buyers is, how much can I be approved for? And on the face of it, this is a pretty simple, straightforward question, and it seems like it should have a pretty simple, straightforward answer. And in this video, I am going to give you an idea of how to calculate a rough estimate. That being said, to get a useful number, you really are going to need to submit an application to a lender and get a pre-approval. And that's because how much you can potentially be approved for is going to be affected by a number of different factors. For example, how much of your monthly income is your lender allowed to use as qualifying income based on federal lending guidelines? Where is the home that you're interested in purchasing located in relation to you and your job, and how much are property taxes on that house? Is the home located in an HOA that charges dues? What does your credit history and credit score look like? How much will homeowners insurance be on the house? These are just a few of the factors that can go into affecting how much you can potentially be approved for. So while you really need to do a pre-approval to find out the actual purchase price that you could potentially qualify for, I know that many of us want to browse Zillow and get an idea of what's out there before we're ready to actually begin the home shopping process. So in this video, we're going to go over how to do a very quick and dirty calculation of how much you can potentially afford. All right, guys. So here's how to do a very quick and dirty calculation of how much you can potentially afford. Quick note, I did make a companion worksheet to go along with this video. If you want a place to take notes and jot down the various different things we're going to talk about in this video, that's going to be linked in the comments. Feel free to use it. So first step is going to be to gather all of the statements for your monthly bills, like your car payment, any credit cards that you have, student loans, any other loans. You're going to make a note of how much the minimum monthly payment is for each account. There's a section on here if you want to jot that down. Next up, for your student loans, if they are in deferment, we are going to have to calculate a payment for that. Unfortunately, the way that federal underwriting guidelines are written, we cannot count a $0 monthly payment for your student loans for qualifying purposes. We do have to calculate a payment. We're going to use the Fannie Mae calculation, so that's going to be 1% of the outstanding balance. Again, if you want a place to do that math, the middle section here on the worksheet will let you make those notes. Next, you're going to find your two most recent pay stubs. The video and outline is assuming that you're paid every 2 weeks, because that's the most common way to be paid. If you're paid weekly or monthly, you're just going to adjust the math based on how often you're paid. So find your two most recent pay stubs, and you're going to look at how much you made before taxes were taken out. So this is called your gross income. If the amount is different for the two pay stubs, you're going to add those two pay stubs together and divide by 2 to get an average. There is a section on the worksheet to do that if you would like step-by-step walkthrough of that. Again, I want to stress that this is not how an underwriter is going to calculate your income. They're not going to average it based on two pay stubs. It's going to be a much more involved average. This is just a quick and dirty way to get you a very vague general idea of how much you can afford. But I just wanted to stress that this is not actually how underwriting is going to calculate your income. Next, we're going to determine if you have any money that you could use for a down payment. So putting money down for a down payment is going to do a couple of things for you. It's going to lower your loan amount. It's going to help you lower your loan to value and potentially help you get a lower interest rate and potentially lower mortgage insurance costs. And it's also going to help you build equity in your home faster. So sources of funds that you can use for a down payment include money in bank accounts like a checking account or a savings account, or money in a retirement account like a 401k if your plan allows you to make withdrawals or take loans out for the purchase of a primary residence. All right, so now that you have all of this information handy, we're going to go to Fannie Mae's mortgage affordability calculator. That is going to be linked in the comments below as well. You're going to follow along with me to fill out the calculator. So the first thing that we're going to enter is your estimated gross monthly income. So this is the pre-tax income amount from those pay stubs. If you use the worksheet to do the average, that's going to be the amount listed in this box here. Next, we're going to enter the minimum monthly payment for your car loan. If there's more than one, add those together and put that amount in this box here. For the credit card payment section, we're going to add up the minimum monthly payments on all your credit cards and add that in this box here. So for the next section, we're going to add together all of the minimum monthly payments on all of your student loans and any other loan obligations that you may have. Quick side note, if you want to get a more accurate idea, when your loan goes through underwriting, the underwriter is going to have to take into consideration any installment payment plans that you have, like Klarna or Afterpay, that have 10 or more outstanding payments remaining. So if you want to gather statements for your Klarna and Affirm accounts and add those in, if they have more than 10 payments, that'll help you get a better idea of your actual liability burden. And just a quick reminder, if any of your student loans are deferred, we're going to use the 1% of the balance remaining as the payment for those student loans. Next, we're going to adjust the down payment calculator to 0. This way we can figure out the base purchase price, and from there we'll calculate the percentage that you have available to use as a down payment and adjust that later. For the interest rate, we're going to use the most recent daily rate posted on my Instagram account. That'll be linked below as well. These are the national daily rates for conventional FHA, jumbo, and VA loans. If your credit score is above 720, we're going to use the rate labeled 30-year conforming. If your credit score is 720 or below, we're going to use the FHA rate for this. Again, just want to stress this is a quick, vague idea. You may not end up with the loan type that we're talking about in this video based on your credit score, but just for the purposes of doing this calculation, this is just an easy way to give some instructions. All right, once you've entered all of this information, the calculator is going to show you the estimated maximum purchase price that you qualify for and the corresponding payment for a 30-year loan. All right, now that we've determined your base purchase price, refer back to the amount that you calculated as having available for a down payment. You're going to take the amount that you can use for a down payment and divide that by the maximum purchase price that the Fannie Mae calculator provided for you. This is going to give you a decimal. You're going to move the decimal 2 spots to the right, and this is going to give you the percent that you can use as a down payment. Update the down payment section here with the percentage that you just calculated, and your maximum purchase price and monthly payment is going to be updated to reflect the new higher amount. All right, guys, that's it. This was the quick and dirty way to get a rough estimate for how much you can potentially get pre-approved for. Again, I can't stress enough that this is just a rough estimate, and that to get a real and usable number, you need to talk with a lender, because federal mortgage guidelines have a lot of nuances and that will affect every step of this. You also are going to need a pre-approval letter before an agent is going to be able to take you to view homes. But for the sake of browsing Zillow and dream board making, this should do. So if you have any questions, please feel free to leave them below or reach out to me. And if you want to do a personalized consultation and discuss your pre-approval, please reach out to me. I'm licensed to do business in North and South Carolina, and I also have an access to a network of lenders nationwide. If you're not in my state, I can put you in touch with somebody who can help you. Thank you guys for watching, and I'll see you next time.